Things I wish I knew before I start Forex trading. These things will save you years. Let me be honest with you. Forex trading is not fast money. And this is the lie most beginners believe. If you came into Forex with the intention to turn a small account into a life-changing money within few days or few weeks, I am sorry, this video will disappoint you, but it will give you peace of mind. I am sharing things I genuinely wish someone sat me down and explained before I started trading, because these lessons cost me and a lot of people money, time, and confidence. Stay with me till the end, because one of the points can be the difference between blowing an account and becoming a real trader. First, Forex is not fast money. Forex trading doesn't work like gambling or betting. Understand this. Think about it this way. No serious profession pays you just like that without you learning it first. The same way with Forex. The market is not in a hurry, and anyone who rushes usually learn through losses. Once you accept that trading is slow at the beginning, your mindset will change and your decisions will improve. Next, treat Forex like a career. A career means responsibility, not vibe. When you treat trading like a career, you will stop entering positions because of excitement or fear. You will start creating rules: when to trade, when not to trade, how much to risk, and when to stop. This mindset alone is what separates people who last from those who quit. Next, it takes time to master. No one masters trade in one day, 1 week, or 1 month. Your brain needs time to master price movement, market structure, risk, and your own emotions. You need time to master this. Struggling doesn't mean you are bad at trading. It means you are at the learning phase. Progress in trading is slow, but it is real if you stay consistent. Next, risk management is more important than strategy. Most beginners focus on strategy and forget risk management. A strategy only tells you where to enter, but risk management decides how much you are going to lose if that trade goes wrong. Even professionals lose trade. What differentiates them from amateur is that they control how much they lose per trade. Next, big account, small leverage, small lot size. This particular point is boring but very powerful. Small lot size protects your account from emotional decisions. Big leverage will make you feel confidence, but it will magnify your mistakes. Real traders don't rush growth. They protect their capital first. Next point, you will blow your account. Learn from it and move on. Most traders blow their first, second, third accounts and even more, and that's the reality. The mistake is not blowing the account. The real mistake is blowing an account repeatedly with the same behavior over and again. Every loss should teach you something about discipline, patience, or risk management. Next, trading psychology is 80% of the game. Trading tests your emotions more than your intelligence. A lot of people don't know this. When you are winning, greed pushes you to overtrade. And when you are losing, fear pushes you to revenge the trade. Learn to strike a balance. Learning how to control your emotions is more important than the perfect setup. Learn to strike a balance between winning and losing. Trading is about probabilities, not perfections when you are winning. Don't regret about making more when you win, and when you lose, don't punish yourself emotionally. You don't need 1,000 indicators. More indicators doesn't mean better decisions. Too many indicators gives conflicting signals and will confuse you. A clean chart helps you see clearly what price is doing. Complex strategies fails because they are hard to execute. A simple trading plan will make you to stay disciplined and confident. The clearer your system, the easier to trust. Next is demo trading. Demo trading is useful. Match your demo account size with your real account size is very important. Trading demo is not a waste of time. It helps you to test strategies, practice entries, and understand executions without pressure. But demo only works if you treat it like real money. Using a huge demo account size will create fake confidence. And that's where a lot of people are missing it. Your demo account size is $10,000. And when you want to fund your real account, you fund $100. The margin is on the high side. It's just an expressway in blowing that account. When you want to create your demo account, create the demo account with the account size of exactly what you want to fund in your real account. Reduce it to the exact amount that you wish to fund your real account with. That's when demo becomes useful for you. Next, trading less will give you a better result. More trades doesn't mean more profit. Overtrading usually comes from impatience or boredom. 2 to 3 quality trades a day is enough. Not trading is also part of trading. Trading is not a race, so you are not in any race with anybody. In trading, waiting is also a skill. Learn this. If the market doesn't give you a clear setup, stay out of it and protect your capital. Preservation is progress. Again, everyone's trading journey is different. Don't put pressure on yourself. Comparing yourself to others creates pressures and bad decisions. Let your focus be on becoming better than you were yesterday. Most forex mentors are marketers, they are not real traders. I know that a lot of them will be mad at me for saying this, but that is the truth. It is not everyone teaching trading is a profitable trader. I fall victim in the hands of many marketers who call themselves mentors as a beginner. I mean people who earn more from selling courses than from trading. It was quite painful, but I kept learning. I kept searching. I kept back testing. Quite painful. And I learned that a lot of people have been through this. Some quit halfway. That was the major reason I am bent on duplicating what I know in the life of people who came across my videos and who come across me for mentorship through practical trading sessions, not video courses. Always test what you learn and trust your own results. Lastly, survival comes before profit, not the other way around. This is the most important lesson in this video. Your first goal in trading is protecting your capital, and your second goal is profit. Investors cares about consistency and the risk control, not excitement. If you can trade for 30 days without blowing your account, you are already doing well. Forex is not easy, but it is fair if you do things the right way. It rewards discipline, patience, and respect. If you survive long enough, profit becomes possible. If this video helped you, Like it so that others can learn this truth. Subscribe to Finspoke for honest trading education and watch the next video on the screen to learn more about trading with genuine strategy, where I show beginners how to trade without blowing accounts. Also, check the trading playlist. My name is Juliet, and this is Finspoke.